The local exchange is up against a risk-off environment, with investors still fearing potential effects of the collapse of Chinese property giant Evergrande. Trade in Evergrande shares has halted in Hong Kong this morning, prompting doubts about its future, given that it has a dollar-denominated bond payments due on Monday. Petri Redelinghuys of Herenya Capital Advisors joins us now to talk through the latest market developments. A very good afternoon to you. If you could give us a sense of how the markets opened in early trade and what factors are driving those moves.
Good afternoon. And yeah, we've actually had quite a robust start to the day. The top 40 index is up just shy of 0.5% at this stage. And it seems as though there's a little bit of, I want to say, calm returning to the markets. We had a relatively rough week last week. True enough that the Asian session was negative, 2.2% down on the Hang Seng index. However, the CSI 300 index also in China, that was up 2/3%. So most of that fear really concentrated around the Evergrande situation, because obviously they've got a dollar-denominated bond payment coming up, which they more than likely won't be able to make. They do have a deal on the table to restructure the business, though, which will effectively move the control of their property portfolio to another business. So that might, be a pseudo bailout for them. However, the market is still somewhat uncertain around what's going to happen there. I do think, though, that the Evergrande situation is a bit of a sideshow, if you will, compared to the potential risks that, a northern hemisphere energy shortage is potentially to cause, right? And we're looking at a situation where, particularly in China, factories, food manufacturers, all sorts of businesses, buildings are being asked to curb electricity consumption because, coal prices are going roof. Essentially, there's just shortage of supply for all sorts of energy inputs. That's coal, oil, and natural gas as well. So that, I think, create a potentially larger cascade if we do see, production disruptions and stoppages in the China. The effect that's going to have on the global supply chain is going to be, I think, a bit worse than the potential of Evergrande being made a martyr of and being allowed to fail.
And talking about oil, oil prices seem to have stayed above the $75 barrel ahead of the OPEC Plus supply policy meeting later on today. Do you anticipate a boost in production now or perhaps closer to November and December?
So it's a bit of a tough call to make. That OPEC meeting we'll get the minutes of that meeting a bit later today, I believe. However, there's a number of different sort of driving forces behind this. If you look, for example, at current production output from a lot of the OPEC nations, a lot of those countries are actually producing less than what their quota is at this stage. So even though they're allowed to produce more, they're not. So we have to ask the question, is that because they don't have capacity to produce more? So even if we do see a production cut in the quota, we're already producing under quota as it is. So I don't personally anticipate for there to be an increase in production. And even if they do increase the production quotas, will that be followed through actual on-the-ground increase in production? I don't think that changes, truthfully, in any significant way before December. But I guess time will tell, right? For now, energy prices are starting to bite. And there's a lot of news and sort of, noise around natural gas prices and coal prices, which, if you look at the levels that they're trading at now, is indicative of about $150 oil price, right? So that could be monumental. Obviously, oil price will take some time to get there, provided that we don't see, a sharp increase in output. Although if you look at inventory, so there's a bull case and a bear case. Right? So the inventories keep drawing down. So even though we might see in the very short term an increase in production, inventories are sitting far below the 5-year average. Right? So I do think that we probably see higher oil prices in the medium term. Whether that is impacted by a short-term shock today, but the need of an increased production quota affected nations, that's somewhat likely. However, I think what's going to be more interesting is to see whether or not the OPEC nations then do, produce as much as what their quota is allowed. At this stage, they're not quite producing as much as what they're allowed to.
Let's take a look at Ascendis Health for a moment. The shareholders of Ascendis Health are due to vote on a recapitalization plan a bit later on. And if approved, it would take it from a company that's currently generating 8 billion rand in revenue to one that generates only about 2 billion rand from solely South African businesses. How do you see this vote playing out?
Oh, I don't want to speculate too much ahead of this. Full disclosure, no position in Ascendis Health. So it's a bit of a difficult challenge. I mean, it's a very make or break situation today. If the vote to restructure the business does not, carry through, we might have a business that's essentially worth nothing by the end of the day, right? So it's a very important moment. I think it's probably more wise just to wait and see what the outcome of the shareholder vote is.
Now, the Internet Service Providers Association, ISPA, which is an industry body that represents most of South Africa's community of ISPs, wants the country's communications regulator to crack open South Africa's mobile industry for greater competition. What are your thoughts on this?
I mean, I think that would probably be a good move, to be honest with you. We've seen, even some of the big heavyweights like MTN, for example, start indicating that they want to unbundle their towers business from their ISP business and from their sort of telecommunications business, so or from the carrier business, if you will. So I think more competition is always welcome. I wonder how ICASA is going to deal with things like satellite internet that is soon to be a reality for I guess most people around the world. How those bandwidth restrictions are going to be dealt with and so on. I do think that we have a very narrow market in the telecommunications space, and more competitors will be welcome because it will lead to lower prices for us. South Africa has probably one of the most expensive data costs out there. I mean, even countries like Indonesia are almost 10 times cheaper per megabyte than what it is in South Africa. So, with lower data fees, with lower telephone fees, comes opportunity for small businesses to do well, to build an economy around e-commerce, right? If you look at e-commerce sales growth for most developed countries, it's still a very small percentage of total retail sales, but that sales growth is happening, in double-digit growth every year. If we can create an environment where we have a more thriving ecosystem for e-commerce in South Africa, it's going to create a lot of opportunities for smaller businesses and entrepreneurs and so on. So I think that more competition is always welcome. The likes of Vodacom and MTN might not agree, but let's create a more fair playing field.
Well, Petri Redelinghuys, we'll leave it at that for this afternoon. Thank you for today's market update. That's Petri Redelinghuys from Herenya Capital.